Hey, this is Brady Webb, American Mortgage Solutions. So, big question is, what did the Fed rate cut of 25 basis points do yesterday? Well, I'm going to show you here on the charts what actually happened. So, this is the mortgage-backed security market, and this is the 10-year U.S. Treasury. So, first we'll start with the U.S. Treasury. I'm going to give you a little bit back up a little bit. So, on August the 22nd, that's when the Fed met in Jackson Hole and signaled that they were probably going to cut 25 basis points to the Fed discount rate, Fed funds rate. The After that signal, or that they talked about cutting, of course, we were right here, 432, 4.32, sit over to my left, is where the price was on that Treasury 10-year. Then it started declining. Well, all the way down to here, I think I did a video on September the 8th saying this. It came all the way down here to 4.05. So basically, the 25 basis points had already been priced into the market by September the 8th. Well, yesterday was September the 27th right here, or 17th, and you can see we got the 25 basis point cut. Then what happened? We had right here, you can see this alert to lock. At 2:56 p.m., the market started going the opposite direction. So you can see the 10-year it turned green again. So it started gaining momentum, and the yield started increasing, which causes the bond market, the mortgage-backed security market, to decline. So let me go back to the mortgage-backed security market. So same thing. Let's go back August the 22nd. You see right here, after we started out the day right here at, you can see it to my left, 99.95. Then they signaled that they were going to possibly cut rates by 25 basis points to the next meeting, which is September the 17th yesterday. And you can see we got this right all the way up here to 10. Actually, we got up to about 10. I think it was 101.30 something. It says 101.30 right there. It might have been a little higher than that, but we basically have been sliding sideways for about the last 7 days, 7 to 8 days. Yesterday, they announced the 25 basis point reduction. And what happened? The mortgage-backed securities actually started declining because the bond market, or the 10-year, started increasing. So we put out that, again, the alert to lock was put out around 256. So we locked in anybody that wasn't locked, that was in our pipeline, that was probably going to close within the next 30 days. And what will happen going forward? I think once this all settles out, then we're going to continue to get an increase. Right here, the yield will continue to increase. It'll take maybe a couple weeks, maybe a month for all this to shake out. And then hopefully this 10-year will get back on its trend, drop below 4%. And then we got another run down to 390, which will give us some room for the bond market to go back up. So to answer your question short, market actually got worse yesterday. And you can see this morning, yesterday, you can see where it dropped 22 basis points from 10 o'clock. Right now, we're down 8 this morning before the market even opens. The 10-year's up 2. So we continue this trend about every 20 basis points that this thing goes down, we usually typically get a rate change in the pricing. So about 25 to 50 bips causes about a eighth to a quarter in worse rates. Right now, rates are really good. We're in the mid to low sixes, and in some cases in the mid to high fives, depending on what type of loan we're doing. So if you got any questions about refinancing, or if you're purchasing, and or you want to get pre-qualified, give me a call. I'd be glad to go over all this with you. I'd be glad to get you the best rate possible and protect the rate for you, because we do watch this daily. Keep an eye. So we don't have a crystal ball, but we do the best we can to get you locked in at the best rate at the lowest cost. Hope this helps. You guys have a great day. And again, if you have any questions, reach out to me, 502-655-0106. Talk to you soon. Again, this is Brady Webb with American Mortgage Solutions.